The optimistic sentiment prevails on the market as this trading week is coming to an end. The US dollar is extending profit against safe haven currencies, while the euro and the pound are sliding. Given the current economic conditions, it seems that Europe needs additional economic stimulus. Today, Eurostat released the final GDP data for the second quarter. On a quarterly basis, the growth rate has contracted by half, while in annual terms, the EU economy expanded by 1.2%, which is a sign of a slowdown. Investors expect the European Central Bank to lower the interest rate next week. The euro-dollar currency pair is still trading sideways at 1.1031 following yesterday's volatile session. The euro bulls have lost their gains after a positive macroeconomic data from the US had been released. Traders are not active today as they are waiting for the US jobs report to come out. This news may dampen the euro bulls' enthusiasm. The strong dollar has slightly influenced the pound-dollar pair dynamics. The quotes are falling lower but still hold above the 23rd figure. Sterling bulls are wary of bad news. Despite the recent changes in the UK Parliament, uncertainty around Brexit still persists. The main question remains open: how low the pound will drop if the UK does not reach a deal with the EU. The Swiss franc weakened the most against the dollar. Risk appetite is growing amid positive news from the market and encouraging data from the US. Concerns about the coming recession have faded. Gold is trading in the red zone at $1,515 per ounce. Risk assets may continue the upward trend provided that the US jobs report comes in line with expectations. However, some market participants do not share this positive outlook, as traders' sentiment may be easily changed by a new Trump's tweet. That is all for now. Thank you for watching and stay tuned.